Let's talk about these markets. Well, yeah, it is what it is, isn't it? Do you think the bottom and the top are both in on the CSI 300?
For this year, probably. So I do expect China-Asia market to continue to in somewhat range-bound trading for the major index. But there's some potential upside catalysts, right? As you mentioned, about the fiscal policy, but also central bank is also quite accommodating.
What is the most, I guess, meaningful catalyst in terms of the policy front for you, Tommy?
I think it's a combination. So I think having that sufficient liquidity, it is important for the economy, and also will help the capital markets, especially for the growth and the mid and small cap, if you will. And we do see, for example, mutual fund sales has been picking up. So normally, when you see the market pivot up in May and June, there will be 2-3 months of lag, which is happening right now. All of those will help, but also on the physical front.
Tommy, we're in the thick of earnings season. What do you make of it so far? And do you think, given what we have seen, do you think these multiples are low enough and cheap enough?
We still on the back of Q2, which is one of the worst quarter from an economic growth and a corporate earning in a percentage change perspective. But overall, China as an economy grow more than 10%, right, from COVID, and then the upstream sort of revenue generating capability is reasonable. So therefore, I do see potential upside for the, especially as I mentioned, the growth and the mid small cap in the near term.
We were asking a lot of guests about what is going to lead this recovery then. If we're staying range bound, you're looking for catalysts. Once we do see that catalyst on the policy front and whatnot, what's really going to take charge? Is it still going to be the tech sector, which has been continually battered, or something else?
From an investor thesis perspective, so we favor, for example, food and beverage, which are relatively more resilient from a consumer perspective, and also EV supply chain, especially on the upstream, as well as renewable. We see the recent policies, especially end of July, Politburo committee meetings. All of those are really pointing towards infrastructure, renewable. Those are the sectors we are recommending clients to really position.
Right, and we had these earnings, not to get into specific companies. I think the earnings out of XPeng were disappointing. We had a drop in EV names substantially, BYD and friends yesterday. Buying opportunity, broadly?
Well, we need to look at specific companies. So I think, similar to the U.S., I think the first 2 quarters is the revision of discount rates, primarily for developed market, and also earning revision, right? So after that, it will be company specific to see whether they have pricing power to be able to beat that revised down earnings. So that will really lead the stock performance.
Your take on, I know you're thinking A shares, we could be kind of stuck in these kind of ranges for some time. What about for H shares? Is that something that, continues to see more headwinds given the Fed picture and how hawkish we might be hearing from policymakers there? Or do you think if it's time to buy Hong Kong, it certainly is maybe a good entry point?
Well, I think Hong Kong is a little bit more complex. It is more linked to the rest of the world. So we do see the Fed would take a bigger sort of a factor into the market. So therefore, we see the past 4-6 weeks, the liquidity has dried up, which really activate the volatility. But overall, we think with China, potentially making, we haven't seen that, but we potentially see that pivot towards more relaxing under COVID. It will also help Hong Kong market. If you look at southbound, there's continuous inflow from China into Hong Kong.
Tommy, final question. What do you make of these pricing in the property sector, whether that's equities or credit? Anything there?
So this is being well analyzed, right? So we continue to have the view to be very cautious, both on the fixed income and the equity side for the private listed companies, given the headwinds. I think the government's focus is really on protecting the overall economy to do not have that spillover impact. But on the bond and the equity holders, so the caution will remain. But overall, I think I came back from the U.S. and Singapore. Investors do definitely agree. China or property sector are too big to ignore. So we are watching how the sector will develop.